I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today is January 26th. We're going to be going over an interest rate update for you.
Yeah, and going over some historicals on purchases and the refinance volume.
That's right. It's something that we haven't looked at in a while, but if we look right at this first chart where we have it's the Refinance Index. It goes back to early 90s, and I really wanted to highlight the beginning of COVID, where it was basically March of 2020, we had a spike of refinances.
Right, and COVID didn't make the spike in refinances. Right. COVID had an effect on interest rates, which had an effect on refinances.
You know, some of you will recall that the moment that COVID hit hard, the government started pumping money into the system, right, into the economy. That's called, that was quantitative easing. There was stimulus. And that drove interest rates down low.
Right. And why did they do that? Because they were afraid things were going to all of a sudden lock up and businesses were going to close. They were scared to death.
Right. And then it was during that period from really April of 2020 all the way through December of 2021, just last year, where millions and millions of homeowners, majority of homeowners locked in low interest rates, really in the 2s to about 3%. On these 30-year fixed. The reason why that's important to make note of is because these are homeowners out there who own a home, and today's interest rates are higher.
Yeah.
So a lot of these folks are holding these low rates.
Right. So they've been in their home for a couple years. It could be a younger couple or an older couple, and life has changed. Well, they need to move out of it. Well, how do they move out of a home with such a low interest rate?
So want to bring that to your attention. Also show you what the purchase index looks like. And this goes back to January of 2020. And what you'll see here is towards the left is this valley here. This is where COVID started. Housing, a lot of people were not buying homes. They weren't even going out and looking at homes. So there was a lot of traffic loss. And then it picked up really in that summer soon. And then we had a really strong purchase market. And then, of course, according to this index, it just shows, this is a national index, but it basically shows it kind of tapering off, but really it started in 2022. What happened in 2022? Rates started coming up.
Right. And one thing interesting to note is when COVID hit, a lot of people thought that homes just weren't going to move. But when these buyers were looking at these interest rates, they were thinking, well, how can we not move? It was forcing them to move. Meanwhile, the supply was dropping because there weren't many people, that interested in selling. So any homes that were being listed for sale, they were getting activity and they were getting multiple bids.
Housing purchases have been really low, the applications, but just in the last couple of weeks, we've seen an uptick in activity because we've seen interest rates actually improve.
Yeah.
And this is in one of the articles here we wanted to show to you, just for the third straight week, we've seen mortgage applications on the rise.
Right. And as I was just telling a caller today, who's going to be buying, is that I told him, you're going to see the Fed's increased interest rates for the Fed funds rate next week. That doesn't mean the mortgage rate's going to increase. Mortgages already know what the Feds are doing. I said what can happen is if the Feds do something different than what they've already told the market they're going to do. Even though we have something coming next week and the following month, interest rates should stay pretty stable and start to kind of come down as long as nothing new pops up.
Yeah, and the Fed's going to be meeting on February 1st. That's going to be a big day. There's a 98% chance, according to the futures markets, that it will be only a 0.25% increase. But again, that's already built in.
Right.
Everybody's already anticipating it.
And I actually saw something that said 99.9. I'm like, man, that should just be 100.
Yeah.
But it is almost certain that they're going to do it. Anything can change. Yeah. So, that's why it's not 100%.
So where are interest rates today? And before I go through this is for informational purposes only. This is not financial advice. The 30-year fixed today is 5.875. The 15-year fixed conventional is 5.125.
The 30-year FHA is 5.625. The 30-year VA, 5.625.
And these interest rates are based off of these loan assumptions for conventional FHA and VA loans. There's no extra points to get those interest rates.
Right. And it's important to know that there are a lot of interest rates potentially out there like that, but come with big points. So
we're mortgage brokers. And also something that's very, very important is that our interest rates that we're going to post are typically better than 90% of all banks out there.
Can I just tell you a call that I got from a borrower 2 weeks ago? And I quoted him, and he looked at me, didn't look at me, he was on the phone, and he kind of had a hard time believing me. So, that's what can happen when you are quoting rates low enough to where it gets people's attention. They're thinking, what am I missing? There's nothing you're missing here.
The banks that have the highest interest rates are the ones who do the most marketing, the biggest banks. So, and we all know the big bank got markets everywhere. They've got race cars, they've got domes, and they've got all sorts of stuff.
Advertising budgets that are big. They're on, branches on every corner. That's expensive.
If you call those banks, the rates are horrible. Absolutely horrible. So reach out to a mortgage broker. And if you like what we're doing here, be sure to contact us, subscribe, comment. We'll be back.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.